Hello, everyone, and welcome to another Wednesdays with Wendy, where we make small business ownership less stressful, one step at a time. I'm coming to you today live from my kitchen. It is my last day of work for this month, and I've got some Thanksgiving cooking to do. So I thought, well, I'll just go live from my kitchen. Maybe it'll be like one of those cooking people, which maybe that's in my next life. I'll do a cooking channel. That'll be fun. Anyway, today we are going to talk about SALT, but not this kind. SALT stands for state and local taxes, and the One Big Beautiful Bill Act has increased the amount of SALT you can deduct on your tax return. But will it affect you? We'll find out in a minute. If you're just tuning in for the first time, my name is Wendy Kane. I'm the owner of Kane Accounting and Financial Coaching. I do bookkeeping and payroll for independent contractors and small businesses so that you can have peace at tax time and throughout the rest of the year. Okay, SALT. It's not the stuff you're going to put on your food tomorrow. It stands for state and local taxes. Okay? Many of you live in states where the state has an income tax in addition to we all pay the federal income tax. Many states have an income tax, and some cities in states, it's usually larger cities, will also have income taxes. Those are deductible on your federal tax return. Okay. The One Big Beautiful Bill Act increased the amount of those state and local taxes that you can deduct to $40,000. Now, that sounds like a lot, and it is, um, depending on how much you pay, but that's a pretty big deal. So, can you take advantage of that deduction? Well, maybe. Here's First off, gonna have to do some tax education here. There's the standard deduction and itemized deductions. Standard deduction is this. The IRS says, "All right, of the money you made last year, we're going to give you some of that tax free." Like you can just off the top, you can have that tax free. So for 2025, let me check my notes. Single filers and married filing separately, that amount is $15,750. So the first $15,750 that you make is not subject to income tax. If you're married filing joint, that is doubled and it goes to 31,500 because it's 15,750 times 2. And head of household is somewhere in the middle at 23,625. Okay, so that's what you get. You don't have to do anything. That automatically comes off your taxes. It's tax free. So, how does this SALT thing figure into? Well, there's another way you can get a deduction. It's called itemizing. If Itemizing is an alternative to the standard deduction. Itemizing has certain things that count. State and local taxes, mortgage interest, charitable contributions, those are the big 3. If all of those amounts that you pay add up to more than the standard deduction that you get automatically, you're allowed to take the higher amount. That's on your itemized deduction. It's called itemizing. Okay. State and local taxes are an itemized deduction. So, yes, they increase the limit. If it doesn't, if that amount plus mortgage interest, charitable contributions, and a few other things, if it is not more than the standard deduction, then this will not apply to you. You can't take the deduction just because you're going to get a better deal by taking the standard deduction than by doing the itemized. Okay, it's sometimes confusing how taxes work. But if you are itemizing, this is for individuals. We're going to talk about businesses here in a minute. For individuals, if you are on track to be able to take itemized deductions, this is a great deduction because if you're a small business owner or any individual who's making estimated tax payments throughout the year, you can pay your state estimated tax payment by December 31st and be able to deduct it on this year's tax return, the 2025 tax return. If you wait until it's due in January on the 15th, you'll have to deduct it on next year's tax return. So if you are somebody who makes estimated tax payments, quarterly estimates, you want to pay your state quarterly estimates here in December so that you can take advantage of that deduction on your tax return, provided that you itemize. Okay, if you're a small business owner and you have a pass-through entity, that's an S corp, that's the most common. A partnership is also a pass-through entity. Those um those businesses, so the income is passed through. The business doesn't actually pay tax by itself. The income is passed through to your personal return and you pay the tax there. Okay, that's what pass through means. There are 36 states that have enacted a pass-through entity tax. And you might think, okay, a tax, I don't want to pay any more taxes. That's not good. No, no, in this case, this is a good thing. So the taxes that you would put on your personal tax return for S corps and partnerships, some states are allowing you to actually deduct those taxes as a business expense. This is huge. So, if you have a pass through entity and you need to pay your income tax to the state with it's PTET, pass through entity tax. There's a lot of acronyms going around today. Um, if you are in one of those states and you have a pass through entity, what you want to do is pay that tax in December, because if it's paid in December, you can deduct it on the 2025 tax return. It will be a 2025 business expense. If you wait till January, then you'll have to deduct it on your 2026 tax return. And we want to deduct as many things now as we can. Okay, so to recap all of that, if you're just an individual, you don't own a business, this probably doesn't apply to you unless you can itemize. And if you can itemize, this is a good deduction to take. If you're a small business owner and have a pass-through entity, an S corp or a partnership, you can make those tax payments to the state, not the IRS. This doesn't count for IRS, but to the state. Make those payments here in December, and you can get that deduction this year and not have to wait and do it next year. So that is it. It's a bit of a long shot in some cases, but if you can take advantage of that deduction, you absolutely should, because it's a great one. And that is it for this week. I hope you all have a wonderful Thanksgiving tomorrow. I hope you have a great Black Friday. I'll be celebrating somewhere. I don't think I'm going shopping. No one does that anymore. It's all online. um, anyway, I will see you next Wednesday when we can talk about all the year-end topics for businesses, bonuses for payroll, client gifts, that type of thing. All right. Remember, no one is born knowing how to do this, and it is not taught in school. If you are confused and lost, you are not alone. That's why I'm here to help. Go to my website and book a free consultation if you have questions. Sign up for my newsletter, and I'll see y'all next week.